Good morning, good afternoon and evening to everybody. Thank you very much for joining our webinar today and for your interest in our topic. My name is Katrin Glatzel and I work with the International Food Policy Research Institute, and I'm usually based in our offices in Dakar. At IFPRI, I had a program called the Malabo-Montpellier panel. Many of you might be already familiar with the work of the panel, but for those who aren't, the panel is essentially a program facilitated by IFPRI, Imperial College in London, and also the University of Bonn in Germany. We have a team of researchers and communications experts who work on our publications and on our engagement and outreach of the panel. The panel itself is composed of 16 African and European members. They're experts on agricultural development, nutrition, and health. Through our work, we aim to equip African governments with the evidence base that they need to make informed policy choices and decisions to transform the agricultural sector and their rural areas and overall their food systems, which would help them to allow them to meet the targets of the African Union Agenda 2063, the Malabo Declaration, and of course the SDGs. The way we work, we do so by identifying pockets of progress and success across the continent. So we identify African countries that have made particular progress in a given area, and we then analyze what actions governments have taken to move the needle. So we look at the policy and institutional innovations, but also programmatic interventions on the ground and collaboration with other stakeholders, such as the private sector. We then reflect what could be taken to other countries, replicated in different contexts, but also brought to scale. So essentially, we're trying to facilitate learning across borders. In this context, we published a report last year on agricultural digitalization, which is called Byte by Byte. We all know that digital technologies really have the potential to substantially transform the food systems and agriculture as we know it today. And there's so many examples across the continent. In the current context of COVID-19 and concerns over the short to longer term consequences on food and nutrition security in Africa, there's now enormous potential to leverage that potential of digital technologies. For example, from ensuring the continuous food supply into urban areas and connecting farmers and consumers. So I'm delighted that we have this webinar today. Our first speaker is Peris Bosire from Kenya. Peris is the co-founder of FarmDrive, which is a Kenya-based fintech company, which has a very innovative credit scoring model that can be used by financial service providers to assess the credit worthiness of smallholder farmers. It ultimately gives more access to finance to farmers and helps them to increase their yields and productivity. One of the countries that has been a front runner using digital technologies to advance agricultural transformation is Kenya. So I'm particularly excited that Peris is here with us today to share her experience. The second part of the webinar, we have Debisi Araba, who will be discussing possible digital solutions to mitigate the short-term, but also some of the longer-term shortages in food supplies during COVID-19. Debisi is a member of the Malabo-Montpellier panel and is the managing director of AGRF. Before that, he was the Africa Regional Director for SIAT and also worked for the Minister of Agriculture in Nigeria as an advisor. Before we move to the interventions, just a bit of housekeeping. So we will have a Q&A after the two presentations, and you can submit your questions during using the chat box. If you're joining by phone, you can also email your questions to my colleague Hawa. Her email address is h.diop@cgiar.org. So I repeat that again, it's h.diop@cgiar.org. We're also recording this webinar, so you've all been muted at the moment. We're sharing the recording afterwards on our homepage and also through email, and the PowerPoint slides will be made available. So without further ado, Peris, I'll hand over to you.
Thank you, Catherine, for the introduction. I'm going to, yes. So as I was saying, thank you everyone for making time to attend this webinar, and especially to have one of the most important conversations as we go through this pandemic, which is food systems. As we all know and are aware, everyone has to eat. I think food and shelter and healthcare are one of the most basic things that we all have to get access to during this time. As Catherine introduced, my name is Peris Bosire. I'm one of the co-founders and the CEO of FarmDrive, which is a technology company based in Kenya. We've been in operation for the last 5 years, primarily working in the agriculture sector in Kenya, agriculture finance. So what FarmDrive does is we work in finance, at the intersection of finance and agriculture. We apply data science to build tech platforms that enable smallholder farmers to access meaningful financial services. Our main focus is building tech systems, and then we work with different partners who are mostly lenders so that we can extend different financial services to smallholder farmers, including loans, insurance, access to inputs on credit, and financial literacy information and extension services that they need to be productive. We mostly operate behind the scenes because we are a tech company that enables our partners to reach the smallholder farmers who are the consumers. So that's why probably most of you have not heard about us, but our work is very visible. One of our popular products in Kenya is DigiFarm, which we've deployed in partnership with Safaricom to serve currently close to 100,000 smallholder farmers who've accessed our loans, and about 250,000 more who use the different parts of the system, which I'm going to talk about. I think 5 to 6 years ago, in 2014, my business partner and I were graduating from computer science from the University of Nairobi, and we spent the 4 years in college doing different projects, working with different companies like Nokia Research Center, working with PwC and different players, applying our technology skills. And as we were about to graduate from college, we felt the need, and Kenya had created a ripe environment for tech startups at that time. There was an increasing number of technologies coming out from Kenya, like Ushahidi. So fresh out of college and being thrown into that very thriving, very exciting environment of tech, we decided that we want to be part of this, and we naturally fell into working in agriculture or thinking about problem solving in agriculture, because it's an area that both my business partner Rita and I relate to very much, having been brought up in farming areas in Kenya. I grew up in Western Kenya. Rita grew up in the North Rift, and we understand what agriculture means to most families in Kenya and generally across Africa. Agriculture is the main source of income for a lot of employed people in the country, and it's where most people get their income to pay school fees, to buy food, to pay for healthcare. So it was very important for us to choose to address a problem in a sector that we understand. One of the key problems that we picked out or that we noted is the fact that there's still a very big funding gap when it comes to getting money to smallholder farmers in Kenya. A lot of smallholder farmers, especially back then, when you look back, before a lot of the lending innovators came up 10 to 5 years ago, there were very limited options when it came to getting financing in the country, especially for people who didn't work in the formal sector. That's, the formal 30-day employment, which includes largely agriculture. The options were limited mostly to banks and MFIs, probably some SACCOs, but all these had very strict and very stringent requirements, especially for smallholder farmers, records and all that kind of stuff. And most farmers didn't have credit scores back then. When you look back 10 years ago, before the uptake of things like M-Pesa and mobile phones became very prevalent in Kenya and Africa, the digital credit landscape was still very limited. So we decided that we want to make smallholder farmers visible, especially on the financing landscape. How do we get banks? How do we get more people channeling money that's needed to smallholder farmers? Because smallholder farmers are actually businesses. When you evaluate the process that one individual farmer goes through, it's a business. It's an operation that has operating costs, that has revenues and all that, and people and resources that are working on it. So how do we get more banks, more financial service providers to look at agriculture, and especially smallholder farmers, as viable small businesses that need financing? And how do we enable these financial institutions to channel that money to these smallholder businesses that are spread out in different parts of the country in a very cost-effective way and in a profitable way for them, meaning that they should be able to recover their money? So that's the thinking we had back then that got us to start FarmDrive, with a main mission of driving more capital to smallholder businesses so that they can run their businesses profitably. To date, in the last 5 years, having gone through a lot of learnings, a lot of failures and some successes, which have led us to where we are, we have disbursed together with our partners about $7 million to nearly 100,000 smallholder farms of the country. And some part of the process and what we've evolved into is understanding that financing smallholder farmers is not just about getting money from a bank, getting money from a SACCO, getting money from a telco and giving it to a smallholder farmer. It's an entire process that includes looking at the conditions which this farmer is operating in, and are they going to make income, which then led us to create products that are comprehensive and include things like agriculture insurance, being able to deliver quality inputs to the smallholder farmers where they are at the last mile, looking at market linkage with the data that we have, being able to get the buyers on one side and the farmers who are producing and connecting them, being able to enable digital transactions, buyers to be able to send the payments to the farmers in real time once the farmers deliver what they have produced, looking at things like post-harvest. How do you aggregate effectively what the farmers have produced? So what we've built, what we've ended up building is data-driven technology that's able to handle the different parts, because for your money, for your dollar to come back from the farmer, it's not about getting the money from the bank and getting it in the hands of a farmer. It's making sure that farmer is generating an income, they're producing, which means they have to get the quality inputs, they have to plant at the right time and mitigate the weather risks, and they have to sell to a reliable farmer at the right price so that they're able to repay that loan. Our main partner and the main work that we've done over the last 2 years is with the largest telco in Kenya, which is Safaricom, and it's been a very interesting partnership for a small young startup to work with a very big corporate that has rolled out some of the interesting products in the country. But through that partnership, we've seen which actually delves deeper into the discussion and what Debisi is going to pick up on. We've seen the power of digital technologies and companies that are able to adopt those technologies in a quick way and agile way, working with bigger companies to create bigger impact. So in the context of FarmDrive, as I mentioned, we've had, over the last 5 years, we've had to build systems that touch on the different parts of the value chain so that farmers are able to take loans, make income, and be able to repay. So some of the digital technologies that we've developed over the last 5 years includes digital tools to manage farm operations, not to replace the farm operations, but digital tools to help people like extension service workers, the loan officers who work with the banks to digitize the operations, to capture the data on the ground about the farmers, to map the farms so that you know where the farmers are and the weather conditions in those places. So we've been able to create mobile tools that different people who are working with farmers on the ground, like loan officers and extension workers, can use to capture the correct information and also have real-time access to centralized databases. One of the very, very great achievements I think that we've had over the last 5 years is being able to make farmers visible digitally, being able to create digital identities of smallholder farmers. You could argue that, a lot of Kenyans, a lot of Africans are using mobile phones. So in a way, most people have a digital footprint, especially people in rural areas, because they use M-Pesa, they use mobile money. But out of this, how do you know? If you're trying to support smallholder farmers, then you have to know who they are. You have to know where they are located so that your solutions, especially things like insurance and weather-related advisory, they are very context-specific, which makes it very critical and important to know, to separate who the wider mobile users are and who the smallholder farmers are. One of the things that I'm very proud that we've achieved in the last 5 years is being able to, so as I was explaining, the success of digital technologies, especially in agriculture, the core of it and the backbone of the success of digital technologies in Kenya has been understanding who the farmers are and where they're located. So moving beyond our success story, I'll have to mention our success story, which is M-Pesa, moving beyond that and exactly knowing these users who are using M-Pesa, who are the farmers that we are working with and where are they located and which kind of farming activities are they engaged in. Having worked in agriculture finance and agriculture risk, we've seen that the value chain or the activity that the farmer is engaged in is a very strong predictor of repayment. Are they a maize farmer? Are they a dairy farmer? What they're growing ends up being a very strong predictor of loan repayment. And for you to be able to know that, you need that data. So one of our success stories in deploying digital technologies is being able to map out more than 1 million smallholder farmers in Kenya together with a telco to exactly know who they are and where they're located. Once you have that as your database, as your code, then you can deploy different channels and different ways to engage these farmers. It could be through mobile apps, it could be through SMS, it could be USSD, it could be WhatsApp, it could be on the ground extension workers. But at the bottom line or the infrastructure for it is being able to create a database of who the customers are. And I think the same successes have been achieved in countries like Nigeria with Cellulant having deployed Agricore, and Debisi will speak more about that. Moving on beyond the database, we worked with Safaricom to create a loan management system and a loan process that's able to give a tailored loan, let me call it a tailored loan for lack of a better word, to the different smallholder farmers that we've mapped. By tailored loan, I mean a farmer who's engaged in maize farming and a farmer who's engaged in dairy farming, they have different loan needs in terms of how the amount of loan that they need, the loan duration, and the loan terms, the repayment behavior. These people have totally different needs. And that's one of the problems with having standard, uniform, one-size-fits-all kind of products for some markets like agriculture. They don't work, which leads to a lot of risk. So we were able to create very tailored products that look at the different value chains so that we are able to give our customers loans or the products that work for them. If what works for you is a 6-month loan, then you get a 6-month loan so that you're able to go through the process. If you're a dairy farmer and you have more incomes coming in more frequently, then you get a loan term that suits the kind of farming activity that you engaged in. The other key aspect of our technologies is being able to facilitate mobile payments. It's very difficult to walk around with money in cash, issuing that to farmers, more than 1 million farmers who are spread out in different parts of the country. So the mobile money infrastructure in Kenya, which is quite advanced and developed, has been a key success story in reaching farmers, being able to send either digital vouchers for them to go get inputs from input suppliers, being able to send loans to them through M-Pesa, and also having them send their repayments back through M-Pesa in real time, updating their loan accounts in real time. Mobile payments and mobile payments infrastructure has been a key success story. The other aspect of our technology has been automated recovery and collections. Beyond our data-driven credit scoring and designing the right products, recovery and collections is not a process that starts when your loan is late. It's a process that starts from customer acquisition, thinking through how do I incentivize my customer to start making loan repayments when they're able, instead of waiting for them to fall in arrears or to fall into debt, into risk. So our data-driven way, having understood who the farmers are with our core database, we are able to automate the incentives to help these farmers make repayments. We are able to design the right installment tracks or repayment growth paths for them. And I have to mention that this particular module of our systems has been very, very helpful in navigating COVID-19. We had a lot of loans. COVID-19 happened around the same time that we had just issued a significant amount of money to farmers, and some of it was falling due. And we had to think through creative ways to support the farmers so that they're able to sell to the buyers we have on our platform, they're able to take more loans, and they're able to repay with COVID-19 in mind. The kind of data that we have has enabled us to create the right repayment plans for different farmers, depending on where they are currently and the kind of risks that they are facing based on their location and the kind of crops that they're growing. So this, I could go deeper because, I mean, this is 5 years worth of work and different technology modules. So I can delve deeper into the exact modules and how we operate. But in a nutshell, that's the work that FarmDrive does, supporting different lenders to reach smallholder farmers using digital technologies. And as I mentioned, some of our success stories is our core database of creating digital identities for more than 1 million smallholder farmers and having disbursed about $7 million to farmers in loans in the last 2 seasons. So moving on to food systems and COVID-19 and the policies and institution, the policy environment in Kenya, how are we doing and what's going on in that regard? So some of the key areas that I think about in terms of digital technologies and Kenya in general is finance, insurance, post-harvest and market, and then the supply chain. So those are the key areas that I'm going to cover in the next 5 to 10 minutes that I have. So what are some of the advancements that we've made as a country, and what are the strong policies that have helped us move along in things like finance? One of the key aspects or reasons for the success in Kenya that we've seen in agriculture and digital technologies is an enabling environment for innovators to thrive. starting all the way back from M-Pesa, which grew in the way that it did, and then regulation came in to create an enabling environment for it to thrive. We've seen the same effect in agriculture. There's been a lot of direct to farmer lending from innovators that are not banks in Kenya. We have players like ourselves who work with partners. We have people like One Acre Fund. We have Apollo Agriculture. We have MFIs like Juhudi Kilimo. We have Musoni. All these are direct to farmer lending innovators who've been creative around using technology, using mobile phones to get loans to smallholder farmers. The reason why this has been a success and why we have a lot of these companies operating primarily in Kenya, it's because of a very strong enabling environment for startups and tech companies to thrive, both from a fintech side and from a regulatory side, being able to use existing infrastructure. Moving on to agriculture insurance. Agriculture insurance is a very, very big topic, and there's a lot of unknowns still. There's a lot of learnings, not unknowns, sorry. There's a lot of learnings that still need to happen in that area. But Kenya has made quite some progress on being able to provide agriculture insurance to smallholder farmers, which is one thing that I should have mentioned, that the key component for our success on DigiFarm is every farmer that we finance is insured. They get agriculture insurance. The reason why agriculture insurance has been partly successful in Kenya, or why it's growing and there's a lot of innovation, is that it's because of the support from the government. The Kenyan government, the agriculture ministry has been able to subsidize some of the insurance premiums to smallholder farmers, and also support the different intermediaries that are working in the sector to work with the underwriters, which are the insurance companies. That's an area that I've seen a lot of growth in, but there's also room for growth and room for more innovation from beyond the companies that are currently operating in that space, like Pula, we have Eka, and there's a couple of insurance companies that are deploying their own intermediaries. The reason why agriculture insurance has been successful is because the government is heavily involved, especially in providing some subsidies to the premiums. I know the arguments could be, why are we providing subsidies? Is it sustainable? But if you look at most of the agriculture production globally, especially in countries like the US and Japan, insurance is one of the heavily subsidized elements of agriculture production, and I think Kenya is in the right track on that. The other aspect in the success of digital technologies in Kenya is how the government has handled market access and post-harvest. One of the key services that our Ministry of Agriculture provides is one of the key services that our Ministry of Agriculture provides is a real-time market price information repository. It's available. There's a portal called NAFIS, which is available on the government portal, which has up-to-date prices of commodities from different areas in Kenya. The reason why understanding the market price is important. It's very critical for buyers to understand where they should get, where they can get their produce and at what price. Same case for the farmers, to understand what's the best market for them, what's the best price in the market for them, and the government has been able to provide that pricing tool. But a lot of the advancements that have been made on the market side in Kenya currently are from the private sector. We have different companies like TWIGA Foods that have really taken over and done a lot of work in helping smallholder farmers and medium-scale farmers get their produce from the rural areas to the urban markets where most of the food is consumed. And a lot of this movement and the logistics have been made efficient or possible by using digital technologies, knowing who's selling at what time, what quantities they're selling, and being able to get that food transported to the urban centers overnight. Some of the gaps that we have, especially on the market side, include logistics. Logistics are still quite expensive. Post-harvest losses, we don't have enough warehousing facilities or shared warehousing facilities in the country, though there's been some progress. There's companies like cold storage that have done a lot of work in getting farmers to preserve what they're producing, but there's still a lot of room for improvement. The other side where we've made quite some progress is supply chain. We have our fertilizer subsidy program, which is automated to deliver fertilizer to mapped smallholder farmers in the country. And some other aspects of the supply chain include digitizing the agro dealers or the shops where farmers get their services from. iProcure, which is an example of a company in Kenya that has done quite extensive work and built a strong network of different suppliers in the country where farmers can go pick their inputs either on credit and get different services. In the aspect of COVID-19, how does this all tie together in response to COVID-19 and the food systems? Currently, what we've seen is markets are partially operational because of we have a curfew currently in Kenya and also the social distancing. So our farmer markets where most of the people get their produce are partially operational. So much as the people who are selling are social distancing, what we've seen that has kicked in and has been very powerful in terms of growth is e-commerce. E-commerce and moving food has really thrived during this time. We've seen a lot of partnerships between companies that support selling of produce come together. We've seen a partnership between companies like TWIGA Foods and Jumia to help Kenyans order food packages, fresh food packages that they need, and those get delivered within 24 hours. Companies that have existing logistics infrastructure like Sendi, who have different kinds of logistics infrastructure like trucks, motorbikes, they're helping Kenyans go online and shop from food, informal local food markets and get fresh produce delivered to them. However, these efforts are limited to the urban areas and getting food supplies from already aggregated small, medium-scale farmers. We still have a very big gap in reaching smallholder farmers in the rural areas who are producing currently or who have food that's currently being produced, and for them to be able to get that food into the urban markets where it's required. And I will not delve into things like the cess tax that is applied in getting the food to the urban markets. We also have a limitation aggregating the food from the smallholder farmers in the rural areas, getting it to the urban markets where it's consumed. One of the other key limitations or effects that we've seen with COVID-19 is the reduction in financing that's going to smallholder farmers or rural smallholder producers. A lot of lenders are now preserving their capital. They are limiting their exposure. So even from our own end, we've seen a reduction in the amount of money that's flowing to smallholder farmers during this time. And we hope that with more data showing how food is moving and the consumption patterns and the income patterns, we'll be able to generate to have a strong use case or proof points for lenders to continue lending to farmers at this time. I'll hand it over to Debisi to pick up the conversation.
Yeah, thank you very much, Peris. That was a great presentation, and I'm sure questions will be coming in. So everyone, please submit your questions through the chat box, or if you're joining by phone, you can send them by email to Hawa on h.diop@cgiar.org. Debisi, over to you.
Okay, thank you very much, Peris. Thank you, Catherine. Hello, everyone. Good evening, good afternoon, good morning, depending on the part of the world you're joining us. So I keep telling Peris that, you know, I'm one of her biggest fans, and I make no bones, you know, about that, and I make bold to say she is one of the pioneers really stretching the realms of possibility in the use and deployment of technology in the agriculture and food system space today, anywhere in the world. So I want to begin my short presentation by a quote from Arthur C. Clarke. The late Arthur C. Clarke was a futurist, scientist. For those who know him, he had his 3 Clarke laws. The third law, Clarke law, was that any sufficiently advanced technology is indistinguishable from magic. So if technology is so far advanced, to some people, it will appear as magic. Now, a lot of what Peris has talked about, I know for those who are not technology inclined may not appreciate what's going on the back end of the services that FarmDrive is providing for clients in Kenya. I mean, getting digital identifiers for 1 million clients is amazing from a private-led initiative. The next slide, please. Peris has really given a flavor of what's happening right across the agriculture and technology landscape. We are moving towards a fully digitized, or at least opportunities to fully digitize the entire agriculture and food systems space. Peris mentioned the AgriCore platform. It's a blockchain enabled and powered platform that plugs in all actors, all vendors, everybody involved in agriculture transacting their business on a single blockchain platform. This is powered by Cellulant. And of course, another example of a platform is the MasterCard Farmers Network. This was set up, and it's been set up around the world, where multiple stakeholders, multiple actors can transact business digitally. Peris has already talked about the benefits and the advantages of why we need these digital platforms. But I would summarize it by saying digitization is an enabler for efficiency. So if you want to improve efficiency in any way across the agriculture and food sector, just think about going digital. You know, whether it's in payments, in identification, in processing, in insurance, in using predictive analytics, et cetera, et cetera, et cetera. It goes on and on and on. But we are excited about this new phase that we are entering as a community of practice, where we have much more entrepreneurs and governments as well looking towards digitization and the benefits. Next slide. 2 examples of startups that are using digitization or digital tools in unique and exciting ways come from Nigeria and Ghana. Food Locker, based in Ibadan, in the city of Ibadan in Nigeria, is deploying artificial intelligence to predict demand for household food items, and is working to improve the efficiency of stocking shelves and getting retailers to improve the efficiency of the way they stock shelves. I will come to another technology that's using that on another slide. Lojano is based in Ghana, and they are working specifically in the aquaculture, well, fisheries and aquaculture sector to retail and serve customers through a digital platform. Now, why this is unique They have both a smart, I wish I could have put it all on the slide, but Lojano has both a smart phone application and also the USSD SMS application. So if you do not have a smartphone and you have a feature phone, you could still patronize them and get their services. Now, why is this important? So a lot of you have a lot of producers and fishermen who go out there in hope. The same way we talk about crop farmers farming in hope and then harvesting and hoping to find someone to purchase their harvest, their crops. The same way we have people, the fisher folk who go out there, they fish, or those who have aquaculture farms, they fish, but it's not that their investment isn't really connected to demand. And so what Lojano is trying to do is bridge that divide between demand and investment for supply. And so we hope to see a lot more of these platforms, these trading platforms, these retail platforms that rely on digital technologies and digital tools in the coming years. Next slide. Now, I said I was coming to another company that leverages digital technology for demand. Now, this one I'm really excited about. So TWIGA Foods keeps growing from strength to strength. Most recently, they've been working with IBM to work on a blockchain platform where they could, in addition to stocking for their clients, keeping stock levels sustainable for their clients, but they're also working with retailers on tracking and tracing goods from farm to consumers. This is important. Now, this is something that hasn't really taken off across the continent, especially in the informal market system. So in supermarkets, I think you could still have some comfort or assurance of the tracing and sourcing of goods. So that gives you confidence about the food health, the safety, hygiene standards, etc. But with this opens the opportunity to everybody who retails, whether it's your little mom and pop store on the corner, as long as you're connected, there will be chips you can see the baskets there. There will be chips on those baskets, and they will be traced all the way from farms through processing to retail system. So it will be a digitally enhanced system of tracking and tracing food from production to consumption. Next slide. Now, the Malabo Montpellier panel last year released its policy briefing, Bite by Bite, policy innovation for transforming Africa's food system with digital technologies. Next slide. So in the report, we came up with these 9 recommendations. I want to highlight 2 of them that I will then speak of in the next couple of slides. The first is focusing on investing in the digital infrastructure and that last mile, the connectivity last mile, and bridging the digital divide. The second is creating the agriculture innovation hubs and the ecosystem for the youth to get into developing and designing these technologies and solutions. Next slide. So in the last mile conversation, one of the exciting news that came out of Nigeria earlier this year was that the Nigerian Governors Forum, that's the forum of the 36 state governors in the country, had met with the Minister of ICT and decided as a group collectively to bring down the cost of the right-of-way for laying fiber optic cables. Now this, if you look at the slide, you will see that a lot of the fiber optic cables that are connected to Africa are connected to Nigeria. Now the challenge isn't Nigeria's connection to the global fiber broadband network. The challenge is the last mile penetration. And one of the biggest binding constraints was the cost of the right of way. After the discussion earlier this year, they brought the cost down from 4,500 naira, which was about $10, or which is about $10 a meter, to 145 naira, which is about 30 cents, somewhere around 30 cents a meter. So we expect that in the next few months and years to see a blossoming of penetration of broadband, speeding up internet speeds, of course, and with that, the opportunities for commerce and entrepreneurship, not just in Nigeria, hopefully, but around the continent. Next slide. Now, it would be remiss of me not to talk about the AGRF, whom I now represent, even though I am on this webinar as a member of the Malabo Montpellier panel. The AGRF has two unique programs that support incubation of youth into tech entrepreneurship. The first is the CTA, in partnership with the CTA, the Technology Center based in Wageningen, a competition called the Pitch AgriHack, which is an e-agriculture competition bringing the best and brightest minds and talents from across the continent, focusing on designing and developing solutions, viable business and investment-ready solutions. One of which, actually two of which I mentioned earlier, Food Locker and Lojano, are both graduates or alums of the Pitch AgriHack competition. The next one is the Go-Getters Prize, which is incubated within the Generation Africa thematic platform within AGRF. And that is specifically focused on leveraging and promoting opportunities for youth entrepreneurship in Africa through the AGRF. And so with these platforms that I've talked about and taking you on a journey, I hope you get a sense of why I'm excited by the Perises of this world, you know, by the Lojanos of this world, by the agri-core products of this world, because we think if we can just stay the course. Could you go back 2 slides to the 9 recommendations, please? Back 2 slides. One more. Thank you. If we could stay the course and knuckle down on implementing these recommendations, it is our firm belief that we could usher in, you know, a new dawn in agriculture, entrepreneurship across the continent. We talk about Africa being able to feed itself, but we have a firm belief that Africa can feed the world. Digital technologies, as I started my presentation, I said it's an enabler, and it really is. If we could focus on these recommendations, we can maximize the opportunities within digital technologies as an enabler for ushering in this new revolution in agriculture transformation. Now, a few comments about how digital technologies could support African economies in light of COVID-19. Now, COVID-19 is really a multi-sectoral shock, unlike one we've ever experienced, at least in recent memory. Now, in addition to the public health challenge, there's now the economic shock, the shock to financial systems, the shock to retail systems, the shock to basically the engines of most economies have been stalled as a result of actions and reactions to COVID-19. One of the recommendations, or one of the ideas that I made earlier in the year, it's June, but I feel like we've lived a few years in this year. One of the recommendations was leveraging the urban markets and leveraging those digital technologies to use the existing market systems to save rural agriculture. Now, why is this important? What you don't want to do is allow the lockdown protocols that have been in place in some major cities, not just in Africa, but around the world, to then have a domino effect and a shock to the food production systems. Most of our food is still produced in rural areas. The food still needs to be transported to urban areas. The food needs to be not just transported, it needs to be paid for. People need to work to get that done. And so if you restrict movement, what you're doing is shortening or short-circuiting what was an efficient rural-urban market system in the first place. The other side of things is if you are in an urban area some of you might have heard the term food deserts. If you're in an urban area with limited access to healthy, nutritious food, you are really limited to either what's available on the shelves of supermarkets or markets or what you have at home. Now, what happens is the healthy and nutritious food, the vegetables, the fruits, are highly perishable. So if you do not have the technologies to preserve and store these foods, then you would resort to consuming more grain, which has a longer shelf life, which stores for a long time, and possibly you can cook with just adding water and a few condiments. Our concern is there might be a knock-on effect on nutrition and health outcomes if we do not allow the regular food systems flow between rural and urban markets, so rural production hubs and urban markets. At this year's AGRF Summit, we will be focusing acutely on this. The theme for this year's summit is Feed the Cities, Grow the Continent, leveraging urban markets for sustainable food systems. And this is important because we need to understand the intricacies of how these systems work. We need to keep people employed. We need to ensure the flow of finance continues so people are able to transact even though they may not be able to spend physical cash. Peris mentioned earlier M-Pesa, the mobile money system here in Kenya. Now, a few other African countries have begun tentatively expanding the scope and opportunities of mobile money transactions. And we think this is a huge accelerator that we need to adopt across the continent as a matter of urgency. It's important to have people with unique identifiers, as Peris mentioned. In Nigeria, between 2012 and 2015, about between 10 and 12.5 million smallholder farmers were registered on a digital platform, and they were receiving input subsidies via their mobile phones, for those who had the mobile phones. Now, why was this such a radical move? It was a radical move because these were mostly unbanked people. These were people who were not part of the formal financial ecosystem. But once you put them in an ecosystem where they could receive funds from the government and receive a subsidy from the government to purchase with their own money seed and fertilizer, you begin within a digital ecosystem, you begin to create what we call a digital transaction history. Now, once you have a transaction history for someone in the financial services sector, you come alive because now there is something to you. There is more to know about you. There's more to understand about you. So now we know, whether it's farmer X or tractor owner Y, year on year, this is the size of their harvest. This is how much they make. Therefore, if they wanted to borrow for the following season to either expand their farmland or improve investments to improve productivity on the existing land, they could take that, to a bank and help the bank, as Peris said, with pricing credit, as we call it credit scoring, because lending money to clients or to people has a price, has a cost. There's a cost to that. A lot of that is lost and fuzzy because the formal banking sector doesn't really understand the agriculture sector. But with a digital ecosystem, it helps to improve understanding of what's going on in the system. It helps to improve trust. It helps to build trust. It helps to build accountability, tracing, contact tracing, the location of people, so people aren't just mysteriously appearing, borrowing money and disappearing into the ether. So there's a lot to gain by adopting a digitalization policy right across your agriculture and food system. It not just benefits the people at the production end, who would be either the crop farmers, livestock herders, aquaculture, fisheries folk, fisher folk. It won't just be them, it would be everybody else involved in the chain. So the people involved in logistics, in transportation, in processing, primary or secondary processing, in retailing, people who are aggregators, who are commodity buyers. It helps to improve trust, and it helps to bring more people into the space. Digitalization, it is our firm belief, that digitalization will play a critical role in increasing the economic opportunities within the agriculture sector in Africa. It is not my personal wish for tens of millions of Africans to toil away directly on farms. It is my wish for tens of millions of Africans to be widely distributed across the agriculture ecosystem. People working on production, people working in retail, people working in processing, people working in mechanization, people working in advisory services. There's so many opportunities available if we leverage the foundation that will be digitalization. With that, I bring my contribution to an end. Thank you very much for listening.
Thank you very much, Debisi. That was a great intervention. We already received a number of questions from the audience, so I will park my own questions for the time being. The first two questions, Peris, go to you. The first one is from Danny Romney. The question is, who is providing the loans? Is FarmDrive managing a loan scheme for farmers using funds from donors? Or is FarmDrive providing a platform that allows banks to provide loans to farmers? In which case, which banks and how many are you working with? And I'll post the second one as well, which is from John Hofmeyer. What is the average size of a loan which is administered using mobile phone technology? Is that initiated and fully based on blockchain technology or based on conventional banks? And finally, is Grameen Bank integrated into your mobile phone procedures? What is the average size of loan which is administered using mobile phone technology? Is that initiated and fully based on blockchain technology or based on conventional banks? And is Grameen Bank integrated into your mobile phone procedures?
Great, thank you for the question. So to respond to the first part of the question, who provides the loan? As I mentioned earlier, we are a technology platform. We use data science to enable lenders. Our main mission is to drive more loans and more capital to smallholder farmers that need it. And we partner with the people who have the money. If you look at the statistics from Kenya Bankers Association, at least less than 3% of the 3 to 4% of the commercial lending goes to the agriculture sector because of some of the reasons that Debisi clearly articulated why financial institutions not able to reach farmers. It's the lack of understanding, and that's where digital technologies support understanding the farmers, being able to design the right loan product. So the answer to that is we are the technology provider that provides the digital layer to help financial institutions and lenders reach the farmers. And some of those financial institutions include telco partners that we work with, like Safaricom, we have banks, we have MFI. But that doesn't mean that over the last 5 years, we haven't put our own money in the pot. We've had to put skin in the game and test out some of our models, our algorithms. We've had to raise actual debt funding from investors to test out some of these hypotheses. When we started, there's no bank that would listen to you without proof that you can actually do this and you can use alternative data and design different kinds of products. So we've had to put our own money into the box as well, but currently our portfolio is funded by the lenders, the banks, the telcos, and the MFIs. We are behind the scenes. What's the size of the loans? The beauty of digital tech and the work that we do is that we've been able to design the right, let me not call them right because we're still figuring out and understanding that, but we've been able to design better suited loan products for the nature of smallholder farming, of the nature of agriculture. Agriculture is not a one size fits all, and it differs even from one value chain, one product to the next. So the size of the loans that we have on the different products is really dependent on the nature of smallholder farming that our clients, the consumers are engaged in. It differs for maize farmers, it differs for the dairy farmers. I would say the average for 1 acre that we've seen from our data is about $90. That's 9,000 Kenyan shillings all the way to 15,000 Kenyan shillings for 1 acre to 2 acres, which is the size that most smallholder farmers have. Are we using blockchain technology and machine learning and all that kind of stuff? So when we speak about our work, we really like to focus on the capabilities that we've enabled, or some of the gaps that we filled in, like creating identities for farmers, being able to assess the risk. There's a lot of there are very many modules, and I saw my business partner is on this call. She leads our tech team. There are very many technologies that are used behind the scenes, including blockchain, machine learning, scraping through thousands and thousands of data, understanding pesticides, being able to understand crop calendars in the country, when is the right time to have a farmer in eastern plants, and when is the right time to have a farmer in western plants. The crop calendars, the macroclimates in the country are very different, and there's a lot of technologies that go behind analyzing that data. And the only thing that a consumer will see on this end is, I was able to apply for my loan on the phone, and I got a voucher, and I walked to an agro dealer and I got the loan, which has insurance. But behind the scenes, there's a lot of tech systems and data analytics that happens, including the blockchain technologies. The core base of identity and verification is actually blockchain. The last question, which I think which was the average loan size, it differs for value chains, and we hope that we'll get to a point with more and more data and lending and understanding how smallholder farmers behave and the risk patterns based both on market, will be able to help banks and any lender that's interested in agriculture give the exact right loan amount that a farmer needs to produce. And most of the farmers don't actually come to you for 100% of their financing needs. Sometimes farmers try to get loans for just fertilizer. Some farmers try to get loans for labor. So it differs, and we hope that with more data we'll become more accurate in understanding farmer needs.
Great. So Peris, there was another question that came in that builds on what you were just talking about. It's from Jackson at Mobivas. Do you give loans to farmers in specific value chains? And if yes, how do you evaluate which value chains to finance?
So we don't give the loans. Our partners, the lenders who have the money, like banks, give out the loans. And how do our tools help them decide which value chain to engage in? We are a data science company, so we go through tons and tons of data, including mobile money usage statistics, understanding where these clients are located, crop calendars. And the beauty of, when we talk about digital technology, I think I have to mention that we're not operating in isolation. It's not just Kenya doing this work. We have organizations like FAO, the IFPRI, that manages Malabo Montpellier panel, that have done years and years of research and work, and there's a lot of open source data out there, like the crop calendars, the food balance sheets, the soil moisture content that's already out there. Our work as a tech company is being able to translate that data into insights so that financial institutions can efficiently lend to farmers. The partners that we work with currently lend to about 7 value chains. So we are talking about grain grams, there's maize, we lend to dairy, we lend to sorghum. And the value chains that our partners lend to are informed by market. What's the demand in the market? Which crops make sense from a lending perspective, in that farmers will be able to make an income and repay their loans. That's what goes into our decisioning module. So our partners lend in different value chains, currently more than 7, and what informs that is the ability to get market and the costs and the risks. Can insurance cover that? We've had cases where weather has weather patterns have changed and our farmers lost what they planted, but insurance kicked in. So a lot of those factors inform what we should look at. Not everything is investable for sure.
Okay, thank you. I think the next question might be for you, Debisi, but Peris, also feel free to come in. It's from Ruben Echeverria. And the question is, what are the lessons from a policy institutional angle on how to promote more digital technology from a government perspective? Which have been the main bottlenecks? And what are the main policy instruments to expand the use of digital technology? And I have a second question here. Perhaps I'm grouping them a little bit. The second question is from Srini in the SIP office in Kenya. And she is asking what the adoption rate of digital technologies by smallholder farmers in Kenya is, and whether that has increased under COVID-19. So perhaps, Debisi, you can make a start. And then Peris, feel free to come in.
Okay, thank you. Thank you very much, Catherine. So I would say, let's take an example from what happened over the weekend. So between Saturday and Sunday, SpaceX, a private company, launched 2 astronauts from Earth to the International Space Station at a cost of $58 per seat for each of those astronauts. At the start of the year, NASA, the US space agency, was paying, I think, about $91 a seat on the Soyuz rocket. At the peak of the US shuttle program, well, it closed in 2011. By 2011, it cost the US, NASA, the US space agency, $146 to launch each shuttle mission. So in 10 years, what did the US do differently? How did they bring the price down? Well, investment, public sector investments. Now, Peris had alluded to this, and she's talked about the plethora of open data sources around the world. Within the CGIAR, of course, there's a program within the CGIAR, the big data platform that works on curating data and ontologies and organizing the data within the CGIAR and also with our partner organizations in the National Agricultural Research Systems, and making sure that the data is open and free. Now, once the data is open and free, then the stage is set for entrepreneurs like Peris and others to take that and deploy their own individual ingenuity to turn that information into useful, viable products and services. So what's the role of government in all this? First of all, government should ensure that in a digital data space, first of all, that they digitize agriculture data. In fact, not just agriculture data, they really ought to digitize all data, because there are agriculture adjacent information. So things like population, that you would think, or even mobile phone information that you would think, how is this connected to agriculture? But once you analyze information collectively, you get deeper insights, not just in behavior. So when you think of artificial intelligence and deploying analytics to understand behavioral patterns that can inform the efficiency of the provisions of services, then you realize you really need a whole load of information beyond core agriculture. So what can government do as an enabler? First of all, digitize all information, make most of it public, figure out how to anonymize information. Of course, you need to protect the privacy of individuals. So make information open enough to be useful for service providers, but anonymous enough to protect the privacy of individuals. But then beyond creating that ecosystem, the enabling environment for the ecosystem, I think it's important for governments to also put their skin in the game and invest. Governments need to invest. So the story of Cellulant today, we have AgriCore as their blockchain platform, but AgriCore, wouldn't have happened if the government did not invest in Cellulant between 2011 and 2015 to develop the Farmer e-wallet program in Nigeria. So that was a public-private partnership that yielded dividends and still continues to yield dividends. In fact, cellular not just operates on the African continent; they operate in Asia, and I hear they're also in the process of signing deals in other parts of the world. So these technologies require public investments. So I use the example of the space shuttle program. If NASA didn't invest in SpaceX as a private company, there's no way we would have had those two astronauts, launch on the Dragon or Crew Dragon shuttle or Crew Dragon rocket. So you need public investments, but you also need the government or the public sector to create that enabling environment. And the way the government can do that is by leading everyone in a race to the top. So let's digitize all the information we have out there. Let's aggregate and improve on the ontologies, making sure that data sets can talk to each other. That then creates the incentive. It makes the lives of people like Peris and other private entrepreneurs much easier. Peris?
Peris, would you like to add something to that? Or shall I move to the next question?
No, Debisi has covered my thoughts.
Okay, great. So the next question is from Mira Shah at Imperial College. So her question is, the COVID-19 pandemic was preceded by one of the worst locust invasions in the past 70 years. What is the role for digital technologies to preempt and respond to these in the future? And what do you think is the next level of development in Kenya's AgTech?
Yes, so I'll keep my video off because of bandwidth. I'll respond to the first part of that question, and I wanted to highlight it during my presentation, but it's such a big conversation right now. So the locust invasion happened, and I think it's been around for a while, even before COVID. Some of the initiatives or some of the what we call efforts that we've seen currently happen, especially from the public development sector corporation, is there's been some funding coming in to the countries that are affected to directly support the farmers that have been affected by this. Where digital technologies come in is the ability to know which farmers have been affected or the areas that have been affected. Is if you've mapped these farmers and you know the areas where some of these farmers are operating, that's the only way you're able to channel the right support to the farmers that have been affected. In our own context, we've had farmers in some of the areas that have been financed lose their crops to the locust invasion, and agriculture insurance kicked in to make payouts and support these farmers. So when we think about things like agriculture financing or digitizing farmers, it's never in isolation. You can't talk about digitizing for market access or digitizing just for finance. The digitization it solves the problems across the value chain. You digitize, you get that core database, and you're able to finance. When pandemics like COVID-19 hit or locust invasions, you're able to know where to target the right interventions, especially things like insurance or payouts to the farmers. And for us, that's how we see digital technologies being very powerful in anticipating some of these pandemics like the locust invasions. And I know in the future, beyond the locust invasion that's currently happening, we have to start thinking about the crops that are going to be planted in these areas. If the locust invasion doesn't go away, how do we shift the farmers to different farming methods? And that comes along with the ability to train these farmers both into new farming methods by providing both on-the-ground support and real-time digital support for them to transition to other farming activities. Debisi, do you want to address the second part of that question?
Thanks, Peris. Catherine, could you repeat the second half of the question?
The question was, what do you think is going to be the next level of development in Kenya's AgTech?
Yeah, okay, thank you. I was hoping Peris, being on the front lines, would tell us what's next. I mean, the question really would be for you, Peris. What should we expect from you and your peers? I'm an enabler. In my current role at the EGRF, we create the right enabling environment for all the partners: the government, private sector, non-governmental, state actors, non-state actors, to come together. Everyone focused on agriculture transformation in Africa. Now, we could do a simple hazarding of, oh, what's the current cutting edge technology out there. But if you think about how far Kenya has come in not just the comfort that people have with cutting edge technology. I mean, M-Pesa is so ubiquitous in Kenya, but I think Kenyans don't realize this. You know, when you step out of the country and you realize how poor mobile money systems are in other countries around the world, you know, it's peerless as a platform, as a technology. Now, what's next for a technology like M-Pesa? Maybe it's adding on insurance programs. Maybe it's adding on savings apps, you know, that gives an auto saving function to M-Pesa, meaning maybe for every 10 shillings you receive, you can set up an automated system or a bot to take out 1 shilling and save it and scurry it away for you. Now, remember in my presentation, I talked about Arthur C. Clarke's quote about technology. That technology that is well advanced, that is sufficiently advanced, could be described as magic. And that's what we're trying to do. We want to put the magic, rather than putting the magic in front of people, you want to put the magic behind the service. You want to improve the quality of service, the targeting of services. So I can hazard a guess that in the next 5 to 10 years, we will have more, you know, bespoke, tailored services to people as a result of the digital ecosystem that we're nurturing in Kenya. AgTech, of course, we will be adopting technologies, other technologies, mechanization technologies that would improve not just productivity, but efficiency along the value chain. So more post-harvest loss prevention technologies, storage technologies, logistics and transportation technologies, cooking technologies. I mean, there's a lot. I mean, if you think about how you convert the food, the crop, to a meal, that is high tech. You know, in some cases, you're grilling it over a fire, you're baking it, you're frying it. You know, now we're starting to understand. I mean, scientists are beginning to understand the relationship between how you prepare a meal and the availability of nutrients in that food. So I think we will get more insights in how we can have better prepared meals and healthier meals. So hopefully we get a healthier population due to the insights we derive from digital innovations. Over to you, Catherine.
Yeah,
Thank you, Debisi.
let me add that a lot of the work that's currently going on, and probably that's why I can't speak too much to it, on the locust invasion is still R&D work. There's been quite some funding on this space, especially from the World Bank to get location sprayers on the ground and things like that. Some of the R&D work that we are looking at from our end, and this is in partnership with companies that have satellite imagery that are able to detect the movements, is early warning systems. If this is something that we had thought about prior to the invasion happened, we would have a solution for it. So this pandemic, the locust invasion in itself has opened our eyes to beyond thinking about our data in the context of insurance and finance and those things. How do you anticipate losses that are going to happen probably 5 years down the line? How do you use data to be able to detect that and have warning systems so that farmers can adjust to those? The other interesting thing that we've been doing on a smaller scale is crowdsourcing the different ways farmers are dealing with this on the ground, because again, the traditional knowledge that farmers have can't be disconnected from the digital technologies and digital advisory that we give, it has to work hand in hand. So some of the things that we are doing is collecting information and crowdsourcing that information on the different ways farmers are dealing with this. And that information would be very useful for research centers, for universities to see how to scale those interventions or how to automate some of those interventions for the next invasion, or to be able to control the current invasion that's happening.
Thank you, Peris. I see that we're running out of time soon, so we've received a lot of questions, and I'm really sorry that we won't be able to answer all of them, but I'll take two more. One is from Isolina Boto. Peris, that's for you. With the implementation of new free trade agreements at regional and continental level in Africa, do you foresee the opportunity to scale up FarmDrive across East Africa, and what will it require to do so? Over to you, Peris.
Yeah, thanks, Isolina, for that question. So, do we foresee the opportunity to scale FarmDrive? Yes, we, as I mentioned, we are a tech enabler, and the beauty of being a tech enabler is you're able to work with different service providers who are reaching the clients directly. Do we have the bandwidth to cover all those countries at this time? No, which is why agriculture interventions should not be limited to single players in a country. There have to be different players who are handling different parts of the value chain, so that we are able to move faster. We cross-share our learnings, and we work closely with different players. Even in Kenya, we work closely with people like iProcure, who are working on the supply chain side. We learn a lot from what Agrico with Cellulant is doing in Nigeria. So there's always room for collaboration instead of trying to go all out and be the only service provider in all those countries. We don't want to take that telco approach. It's better to collaborate in agriculture, especially because the risks are quite high. Yeah. Okay,
great. Thanks, Peris. I would say that's the last question now to Debisi. Debisi, that's from Chris Addison. He says, you mentioned the MAMO panel report approach to policy and the enabling environment to encourage developments on digital agriculture. What are the considerations on data rights of farmers and the incentives for data sharing?
Thank you very much. So I talked about this, or I touched on this earlier. It is important. So the balance has to be between how much information is, or the quality of information that is useful for service providers versus protecting the privacy of individuals. And so that balance is best placed in trust by the governments. It would be unfortunate if it was in private hands, but truth be told, there's a lot of information that's already in private hands out there. Think of social media. Facebook and Google, or Facebook and Alphabet, currently own much more information that has ever been held by any organization about any number of people in the history of mankind. Now, for agriculture specifically, we are working at the country level. There are some countries that have done it better than others. And what we tried to do through the MAMO panel case study approach is show through the case studies what each country, the approach each country has taken, and the pros and cons. There are always trade-offs. There will always be trade-offs regardless of the options you choose. But at least make your decision from an informed position. I personally, from my experience when I worked in government, when we worked with Cellulant on the smallholder farmer database, we ensured that the information was anonymized, and so it wasn't public. So you couldn't find out, information about your neighbor or something through the database. And more importantly, the database wasn't even open. It was curated specifically for those working in the supply chain management. So it is a tough one, and it's important that governments work on the institutional protocols and the frameworks that protect the rights and privacy of individuals, even as they want to open up the opportunities within digitalization for enterprise. Thank you.
Thank you very much. That brings us, unfortunately, to the end of our webinar. It's been great discussion and a lot of engagement from the participants. Thank you very much for that. Thank you, Peris and Debisi, for great presentations and for answering the questions. Having such a rich discussion, it's been really great. As a reminder, the recording of this webinar and also the PowerPoint slides will be available on our website in the coming days. Please also take a look at the Marmo panel website if you're interested in the report. You can find all our resources there. And then lastly, we hold regular webinars on a variety of topics. So if you're interested, you can subscribe to our newsletter through our website or follow us on social media where we share all information as well. So thank you very much again and wish you all a nice afternoon and evening.
All right.
Thank you.
Thank you. Bye-bye.
Bye. Thank you very much.